students, today we are going to learn partnership final account. For partnership final account, the question would be trial balance. Trial balance has two parts, debit balance and credit balance. Debit balance we will write under three places: trading debit, profit and loss debit, and asset. For trading debit, there will be concept is factory related expense and purchase related expense. And for P&L debit, office, admin and sales related expense. And for asset, cash, bank and fixed asset. These are the examples of assets. Now what are the examples of factory and purchase related expense? Purchase itself, wages, carriage, carriage inward, import duty, etc. For admin, office and sales related expense, example would be salary, printing and stationery, commission, export duty, warehouse rent, etc. So debit balance we have to write at three places: trading debit, P&L debit and balance sheet asset. Now for credit balance, we will write at three places: trading credit, P&L credit and liabilities. Now what are the concept to write at trading credit? The goods goes out of my business, that all the goods we will write at trading credit. For P&L credit, there will be a other income, we'll write under P&L credit, and liability itself we will write at liabilities. What are the examples of goods goes out of my business? Sales itself, goods withdrawn by the owner, goods stolen, goods destroyed by fire, etc. For other incomes, rent received, commission received, discount received, etc. And for liabilities, bank loan, creditors, etc. So these are the thumb rules to solve the partnership final account. Debit balance we will write at trading debit, P&L debit and asset. Credit balance we will write at trading credit, P&L credit and liabilities. Now how to solve these particular problems in your exams? First, you will read the question properly. In the initial paragraph, they will give you the two things: the year for which you are preparing the balance sheet and profit sharing ratio of the partners. If suppose profit sharing ratio of the partner is not mentioned, we will assume they are sharing profit and loss equal ratio. Then you will go through the question and we will write this posting part, that is debit balance item, with the help of pencil where it will go. For examples, the opening stock has been given in debit side, that we will write it trading debit. So we'll write with the pencil near that opening stock TD. For example, printing and stationery has been given, so we'll write near that printing stationery PD. This is how we will write down the posting part with the help of pencil in your question paper itself. Then we will read the adjustment. So all the adjustments always has a two effects. Please remember, all the adjustment we will write two times in your answer. So wherever adjustment would be there, what you will do, near that particulars you will put a dot. If there is a one dot, we will leave one line. If there is a more than one dot, especially in data, we would have a two adjustments, that is new bad debts and new reserve for doubtful debt. So we put a two dots. So whenever we put a two dots, so you have to leave a three lines. So this is how you will just read the question and complete the posting part in question itself. Then what you will do, you will draw the lines. This is how we will draw the lines: trading and profit and loss account and balance sheet. But till now you are solving in your books. So in books we have a little bit length is more, but in board answer sheet the length is less. So what we'll do, we'll draw the trading part on the one page. On the back side we will draw P&L. On the another side we will draw the balance sheet. So this is how on the three pages with this format. On the center of the page you will draw one line and then the two columns. Same way we will draw the lines for on all the three pages. So the first page would be your trading account, the second would be your profit and loss account, and the third would be your balance sheet. Here I am drawing trading and P&L on the same side. So this is how you will solve the sum in your exam. Now I am starting the solving the problems in your textbook illustration 1, textbook page number 24. So we are starting with the posting part. You have already jotted down the posting where to write. Again I am repeating, debit balance has only three options: credit debit, P&L debit and asset. And credit balance only has a three option: trading credit, P&L credit and liability. So you have already noted down the posting. Now I am starting with the sums. Illustration 1, page number 24. Over here, the ratio has been given on the first line itself, that is 1:1. So it is an equal ratio. Stock. So it is an opening stock. We will write in trading debit 65,000. Bills receivable. So it is an asset. We will go line by line. Don't break the line. So there is an adjustment in bills receivable, so I am writing in the inner column. Wages and salary. Usually we write to stock, purchase return, buy sales return. So I am just putting the format over here. Let's purchase return, and then I will write wages and salary. Wherever wages and salary two words come, the first one will initiate where the posting will be go. Suppose the word will be on the reverse side, salary and wages. So we will write in profit and loss debit. The first word would initiate where the posting will go, in the trading debit or in P&L debit. Make sure that you write in proper panel, that is unit के नीचे unit, tens के नीचे tens, 100 के नीचे 100. It will help you to make the total in much simpler way rather than to write again on the back side in the working part. Sundry debtors. We have a total, there are 4 adjustments in sundry debtors. One lakh 30 to 500. So 1, 2, 3 and 4. So this is how we will leave the lines. Whenever there are 4 adjustments are there, so we will leave a 7 lines. Bad debts. Now this bad debts given in the trial balance, it is an whole bad debt. So we will write one entire chart. So this is my trading part. Just I am leaving 4 to 5 lines, and from here onwards I am starting with profit and loss debit. But in your exam, you will start on the new page. So I am writing the entire chart. All bad debts. Just remember like this. Oh no. All bad debts plus new bad debts plus new RDD less old RDD. Old bad debts plus new bad debts plus new RDD less old RDD. I will write this entire chart right away now, but don't write any amount. Just we will write the old BD as it is come in our line. So old BD, the amount is 1000. I will write in the inner column because we have to make a total of all these 3 and we reduce if old RDD is there from these 3 amount. Purchase. We have already mentioned over here. Purchase 1,48,000. Motor car. Motor car is an asset. $68,000. There is no adjustment, so I am writing in the outer column. Machinery. There is a one dot on machinery, so I will write in the inner column. Audit fees. Audit fees is a PD. That is profit and loss debit. It is related to office expense. 1,200. Then sales return. So what I will do, I will write buy sales less sales return. Now don't jump to sales part. We will go in line by line. Don't leave the line. Sales return we will write in the inner column. Whatever amount we have to deduct, do write in bracket. Discount PD. That is profit and loss debit. 2,300. Building. There is one dot, so we'll write in inner column. Cash at bank, we'll write in asset side. $12,000. %10 investment. Correct? See, now when there is investment, they have mentioned the percentage over here. So whenever I am investing somewhere, so definitely I will get the interest on it. Correct? But now you can check out on the credit side, there is a no interest part is there. So basically, this is a hidden adjustment wherein I have invested but I have not received anything yet. This trading and P&L we prepare it for entire year. So whatever expense or income of this particular year, we would write it down in trading and P&L account. So even though this investment I have made it for current year, so my income is due for current year, even though I have not received. So this is a hidden adjustment. Whenever percentage has been given near the investment, so you will add interest on it. Correct? So it's an adjustment of income due but not received or outstanding income. So whenever hidden adjustment would be there, we will write at the same time. So 10% investment I am writing. Now no date has been mentioned over here, so we will assume that the investment I have made on the first day of the year. So I will calculate the interest for the full year. The amount is 20,000. So for investment made of 20,000, I am getting a return of 10%. So 20,000 ka 10% comes to 2,000. So this much income, this much interest is being due for the current year, but I have not received. As it is an investment part, so it is an other income for me. So one effect would be I will add to this investment, and second effect would be my profit and loss credit. So do remember this. Hidden adjustment we will do at the same time. So I am just adding interest receivable. $22,000. Make sure that this 20,000 के ऊपर we will calculate the 10% which comes to 2,000. And the second effect, as I told you, the adjustment always has a two effect. So do remember to write on the second effect. So interest receivable, so we'll write on the P&L credit. I am leaving one line for gross profit. So by interest receivable, we'll write directly in the outer column. 2000. So it was a hidden adjustment, so I am doing at the same time. Advertisement paid. The something has been written in the bracket. Advertisement paid for 9 months. As I told you just moment earlier, this we are preparing it for a year, which is equivalent to 12 months. So my all the expenditure and income would be over 12 months or 1 year. Here, if you notice it, they have written in bracket that advertisement has been paid for 9 months. So for 3 months is yet to be paid. Correct? So how you will calculate it? So 4,500 I am paying it for 9 months. So what about the balance 3 months? So just I am showing it, then I will draw working note later on. Amount months 4,500 I am paying it for 9 months. As I am preparing this P&L and trading account for 12 months. So balance month left is 3. So for 3 months, how much? We'll do simply cross multiplication. 4,500 into 3 upon 9. 1,500. So my outstanding advertisement is 1,500. So what are the adjustment for outstanding expense? We'll add to particular expense, and second effect, as I have yet to be paid, it is my liability. So this is an adjustment effect. The amount is 1,500. Again, hidden adjustment. So I am doing at the same time. To advertisement, $4,500, and it is in the nature of outstanding expense. So I have to add outstanding expenses 1,500, which comes to 6,000 in my outer column. And second effect would be on the liability side. I am leaving some space for the capital over here, and approximately 6 to 7 lines. Then I am writing outstanding advertisement. The amount would be 1,500. This month is yet to be paid. So hidden adjustment we will do at the same time. The last one is royalties. Do remember royalties posted under trading debit. Don't make a mistake to write under PD. To royalties. The amount is 3,000. So this is how we have completed the posting of debit balance. Where to write debit balance? Trading debit, P&L debit, and asset. Only one hidden adjustment was there. That is why we have write over in liabilities. Otherwise, this would be blank. Now we are starting with the credit balance posting. Credit balance will write where? Trading credit, P&L credit, and liability. General reserve. It is in the nature of reserve and surplus, the profit of my earlier years. So it is a part and parcel of the owner's money. General reserve. Amount is 14,500. Next one is capital. Now we are not preparing the separate ledger for partners capital. There is not much adjustment in capital account. Only one adjustment of drawing. So I am simply writing over here capital. Only the one part which we have to add in capital is my net profit. So it is not compulsory to open the partnership capital account separately. We can simply write it over here also. Capital of Daya. Amount is 1,60,000. I am writing in the inner column. One drawing adjustment and net profit adjustment. And then capital The second part there is Shama. $1,20,000. Only one adjustment, so I am writing it, only leaving one line. Creditors, obviously my liability. $98,000. RDD. Now as told you earlier, all bad debts and RDD given in the chart, it is your old bad debts and old RDD. We have already prepared a chart for bad debts and RDD in profit and loss debit. Oh no, old BD plus new BD plus new RDD less old RDD. So already we have made a space for RDD. We'll simply write over here and we will write in bracket as we have to reduce this amount from all the three above. It is 1,800. Sales 285 500. See, there is a one more adjustment on sale, so I am writing on the inner column only. 285 500 minus 2000 283 500. Outstanding wages. If outstanding wages are prepaid, if already given in the trial balance, so it is always have a one effect only. So outstanding wages, as I told you, credit balance only has a three option: trading credit, P&L credit, and liabilities. What goes in trading credit? The goods goes out of my business. By reading these particulars, not at all my goods goes out of my business. It concludes. Neither it is my other income. So the option left is liability only. So if you even don't understand the particular word, please go through the thumb rule where it will reflect it. Okay? So where we will write outstanding wages and liability side. If on the debit side it could be prepaid expense of any nature, we will write it down in asset. So outstanding wages हम कहाँ पे लिखेंगे? Liability. If already appearing in trial balance 700. Purchase return. We have already made a space for purchase return 4,000. 1,44,000. Discount. See now discount given in credit balance. Okay? So where we will write P&L credit. By discount 1,800. So this is how we have done with our posting part. Now we'll come down to the adjustment part. In this particular sum, there is a lot of adjustment on debtor. So do remember the adjustment on debtors. What are the order to solve the adjustment on debtors? First we will do the other adjustment, that is unrecorded sales, bills receivable dishonored, etc. Then new bad debts. Then new RDD, that is reserve for doubtful debt. And there is a one more adjustment is reserve for discount on debtor. This we will do at the end. So what is the order? First we will do other adjustments, then new BD, that is new bad debts, and then new RDD. So whenever you go through the question, at the same time note it down if the adjustment orders are we have to change. Now this how we will solve? Just look into the thing. Closing stock. Closing stock we will write at two places: trading credit and balance sheet asset. We'll write at the same time. By closing stock. The amount is 40,000. And the second effect we will write at the same time. Do remember to write. $40,000. Second adjustment is depreciate building and machinery at 5% and 3% respectively. Machinery is over here, less depreciation at the rate percentage. Just write a percentage, because sometimes what happens, if 2-3 depreciations are there, we change the percentage with the different assets. So mention the percentage over here, so you won't make a mistake. So see, write it down. Over here, building we have 5% and machinery 3%. So immediately you can correct it. So for machinery we have a 3%, and for building we have a 5%. So 1,14,800 ka 3% would be how much? 3,750. And for building they have a 5%. 75,000. Oh, sorry. Machinery we have a 3,344. And this would be our 3,750. We'll minus it over here only. 6, 5, 3. This become 3. One, 111, 356. 0, 5, 2, 1, 71, 250. Now we'll give second effects in profit and loss debit. 2, depreciation. Underline it and we'll write it down, machinery and building. For machinery 3,344 and for building 3,750. Make a total of it, then we will write down in the outer column. So 4, 9, 1, 7, 1, 9, 4. So this is how you will do the depreciation. You will write at the same time. Next adjustment is bill receivable include dishonored bill of rupees 3,000. So I have drawn a bill and it get dishonored. So what are the two effects? Less from bill receivable and add to debtors. So what we will do? We will minus it from here and we will add to the debtors. Less bill receivable dishonored. You can write it down in the same way as you will have a less page over here. So B slash R, bill receivable dishonored, and second effect will add to the debtors. Bill receivable dishonored. The amount is 3,000. The outer column 25,000. Here we will write down below only because there are much more adjustments over here. 1,35,500. Now the next adjustment is goods worth rupees 1,000 taken by Daya for personal use was not entered in the books of accounts. So goods withdrawn by the owner, so it is in the nature of drawing. So one effect would be trading account credit side, as goods goes out of my business and it is in the nature of drawing, I will reduce it from capital. So by goods withdrawn, amount is 1000, will write in outer column. Second would be over here, it withdrawn by Daya, so we'll reduce it from Daya. We'll write drawing 1000, we'll write amount is below, as net profit adjustment is there. Write off rupees 1800 as a bad debts and maintain RDT 5% on sundry debtors. And you read the adjustment below that also. Goods of rupees 6000 were sold, but no entry was made in the books of account. So as discussed earlier, we have to solve all the adjustment on debtors in proper order. The order is other adjustment we do first, then new bad debts, then new RDD, and then reserve for discount of debtor. So you can look at over here, the goods of rupees 6000, that is adjustment number 6, were sold, but no entry was made. So the effect of this is, I have made a sales of 6000, but I have not passed the entry. So now what I have to do? I have to simply add to my sales, and the second effect would be, I will add to my debtors. This is the adjustment of unrecorded sales. So these are the other adjustment on debtors. So at the time of reading the question, you will just make a note of it that I have to do adjustment number 6 first, and then I will do adjustment number 5. So here first we will do adjustment number 6 as unrecorded sales. Unrecorded sales will add to sales and add to debtors. I am simply writing U/R, that is unrecorded sales 6000. Now no more adjustment on sales, so I am writing on the outer side 289 500. Second effect would be debtors and unrecorded sales. Amount will be right on the below 141 500. And now we will do adjustment number 5. Write off rupees 1800 as a bad debt and maintain RDD at 5% on sundry debtors. So again I am telling you, if the new in the question, if the RDD would be given first and bad debts will be given later, but then too you will minus the new bad debts first. So order is other adjustments, new bad debts, and then new RDD. Over here they are given in proper order, so we are solving it. And the bad debts and RDD given in the adjustments are new bad debts and new RDD. So less new bad debts, the amount is 1800. Second effect would be, will come down the profit and loss debit. On already in chart we have made space for new PD. So over here we will write it down 1800. Now we will reduce this amount because we have to take the RDT adjustment. 0, 0, 15 means 8, 7, 9, 139, 700. See, if you will write it on proper manner, so you can reduce it over here only. Now the next adjustment is new RDD at 5% on sundry debtors. New RDD at the rate 5%. Correct? Now sometimes what students make a mistake, they calculate this 5% on original amount. Make a note of it. Whatever the last amount was there, on that particular amount you will calculate the 5%. Don't make a mistake of calculating 5% on original amount. Whatever the last amount was there, on that particular amount you will calculate 5%. So 139,700 का 5% would be 6985. So I'm writing down over here 6985. The amount which you have to minus, put it on bracket. So you can remember it that you have to minus. And this 6985 second effect would be in our chart. 6985. Now this chart has been completed. So we'll make a plus minus over here and write it down the amount in outer column. See, now you can look at it. New BD is, that is new bank debts is 1800. Old target is 1800. 1800 gone. So 6985 plus 1000, which comes to 7985. So write it down the amount in the outer column once the adjustment get over. Over there also we have to write the amount in the outer column. 139,700, 6985. The amount will be 132,715. Is that clear? So this is how we have completed this. Posting and adjustment we have done with posting and adjustment. Now the last part. The last part is closing this trading account, profit and loss, and then finally a balance sheet. How you will do that? First we will close trading debit. Just two lines before the profit and loss, we will draw the line like this, single line and double line. When we draw this line, it means it is a line of total. Now with the help of pencil, first we will write it down the amount over here with the help of pencil. ये जीरो के नीचे जीरो आपने प्रॉपर लिखा है तो यू मेक अ टोटल ओवर हियर ओनली सी जीरो जीरो 500 9 plus 1 10 then this is 0 0 ऊपर 8 plus 4 12 plus 1 13 3 330 500. So this is the total of a credit side. This we will write with the pencil. Now come down to the debit side. 0 0 0 5 plus 4 9 9 plus 9 18 plus 3 22 ऊपर 2 6 plus 2 8 8 plus 4 12 2,22,000. So which side is bigger? Definitely the this side. So I will write this amount on first of all both the side. 330 500 330 500. Okay. No need to go it anywhere. Just do everything in this particular page only. We have write this amount with the pencil. So I will write now gross profit. Gross profit carried down. This is my balancing figure. So I will reduce it over here only. 0 0 5 I made some mistake over total. 0 0 0 5 plus 4 9 let's see. This will be 2,21,000 or 2,20,000. So 10 में से ही जाएगा तो 9. Okay. So this become 2, 3, 1,09,500. So I'm writing my gross profit over here 1,09,500. Then later on you can drop it down this all the green color after you completing the sum because we have written with the pencil. I am writing it is with the black pen. Now I will transferring my gross profit to my profit and loss account by gross profit brought down 1,09,500. Now we have to make a total of this. Again we will follow the same pattern. Single line, double line at the end of the page. Then we make a total of it with the pencil 0. Then again 0. Then 8 plus 5, 13, 3. This is 2,000. 9 plus 2, 11, 12 and 13. So 3. So 11,330. This is my P&L credit side total. Now we'll come down to the debit side. 7,985. So properly see whether check it whether you have written on the proper manner. Yes, you have written on the proper manner. So 5 plus 4, 9. 8 plus 9, 17. 9 plus 10, 12. 12 plus 3, 15. 16. 6. 7 plus 1, 8. 9. 11 plus 6. 17. 17 plus 7. 24. 24. 6, 7, 9. Correct? So now 11,330 is the bigger amount. We write on both the side. 11,330 to net profit transfer to capital account. Over here we have an equal ratio, that is Daya and Shama. So we'll divide my profit in the equal way. The net profit is 88,621. 88,621. So Daya and Shama. See the last amount is a 1, which is a odd number. So we have to give 1 rupees one more to either Daya or to Shama because we will divide equally halfly. So what will happen? The amount will become in the point. So no need to write in point. We will give 1 rupees more to either of the partner. So 44,311 and 44,310. Now we'll add our net profit to capital. Net profit 44,311 and net profit 44,310. Is obviously 311 at the end. 9 plus 4, 30. 5 plus 4, 9, 10, 0. 2,03,111. 310. Next would be 4. 4 plus 2, 6. And 1. 164,310. So this is how your balance sheet will get. Tally with 482,321. Correct? Now one thing you have to keep in mind, before starting the totaling of the sum, that is closing the sum, just make sure that you have written all the amounts in the outer column. Because what would happen sometime when balance sheet won't get tally, so then we go and check what is the wrong. So we can, the common mistake find out is we have not written the particular amount in the outer column. So before closing the sum or before starting the closing sum, what you will do, check whether all the amount has been written in the outer column, especially with the sales minus sales return, purchase less purchase return. Sometimes we forget to write depreciation in the outer column, the amount after deducting it. So before closing the sums, what you will do, check whether you have written all the outer column. And after completing the sums, just rub this amount which you have written with the pencil. Correct? So now what we will do, how you will solve the sums in exam? In the first paragraph itself, they will give you the two things, that is the year. Trading and profit and loss account for the year ended over year was 31st March 19. Balance sheet as on 31st March 19. So for the which financial year I am preparing this trading P&L balance sheet from 1st April 18 to 31st March 2019, and the profit sharing ratio of the partner would be given in the first paragraph. Then you will read the question and just jot it down the posting part. Debit balance, trading debit, P&L debit asset, credit balance, trading credit, P&L credit, and liabilities. These three place in both the side will the effect will go. Adjustment always has the two effects. So after noting down the posting part, you will just put a dot wherever the adjustment would be there. If the one adjustment, we will put a one dot. If two adjustment, we will put a two dot. If there is a more than two adjustment in data, make sure that the order of the data, and accordingly you can note of adjustments. So this is how you will start the sum in the exam. Once you make a note in your question paper, then start writing the debit balance posting first of all. Hidden adjustment if there, may do it at the same time. In this sum we have two hidden adjustment. One was 10% investment, so percentage has been given to us, but the date has not been specified. So we have assumed that it is the investment has been made on the first day of the year. So for 20,000, I am getting the interest of rupees 2,000. So one is we have added over here, and second effect we have given to P&L credit. And one more adjustments of outstanding advertisement, where we have paid the advertisement for 9 months and we are preparing this trading P&L for 12 months or 1 year. So we have to add 3 months outstanding. So 4,500 is for 9 months. So for 3 months, how much? We simply do the cross multiplication, where we have find it out that outstanding advertisement is 1,500. So what is the effect for outstanding expense? Add to particular expense, and second effect balance sheet liability. So this two adjustment was hidden. So we have done at the same time. Otherwise, first we will do posting and then we'll do adjustment in line by line. So follow this process. You will complete the sums in a proper systematic manner and on time. Now we are starting with sum number 4. I'm just cleaning the board. Illustration 4, page number 32. From the following trial balance of Piyush and Arun, you are required to prepare trading and profit and loss account and balance sheet as on that date. Trial balance as on 31st March 19. See now, in this particular sum, nothing has been mentioned about the profit sharing ratio. So what we will assume, the profit sharing ratio is equal. Correct? Now we are starting with the sum. 2 stock 30,800 purchase. So whenever purchase is there, you can write it down less purchase return. $80,000 in the inner column. Salaries, leave some 3 to, you will write on the separate page in your exam, but here I am leaving approximately 4 to 5 lines. To salaries 5,000. No adjustments I am writing in the outer column. Wages, trading debit 7,500. Make sure that you write in proper unit, test and 100 order. It will definitely help you to make the total in much simpler way. Carriage. Again, see, carriage, only carriage and carriage inward, both will go in trading debit. If only carriage has been mentioned, that is also a trading debit, and carriage inward, it is also a trading debit. $3,000. Freight is my, sorry, royalties. $2,500. Freight, printing and stationery, $1,050. Be careful when you write. See, it's 1,050. Sometimes you write only 1,000. So even when you pick up the amount, be careful. Sundry debtors, where it will go asset, there is only one adjustment. So we'll leave only one line. Furniture 2,200. There is an adjustment on furniture, so we'll write it in that column. Leasehold property. Now, what is leasehold property? See, basically, lease is what? It is a rent. We have taken on rent. But generally, leasehold it is a free land property. We write in the outer column 25,000. Investment. Now, in this sum, nothing has been mentioned near to investment. So we cannot do any adjustment or any kind of inner adjustment. So we'll simply write in the outer column. So no need to search where is there any hidden adjustment or where the percentage has been given. If the percentage has been given, so we'll calculate the interest. Otherwise, no required. $15,000. Traveling expense, profit and loss, debit. Traveling expense is office related expense. 3450. Advertisement. See, something has been written in bracket. Advertisement in bracket what they have mentioned 3 years. We prepare trading and profit and loss account for 1 year. It means you have paid the expense in advance. So first this is a prepaid expense adjustment. What we do for prepaid expense adjustment, less from particular expense, and second effect would be balance sheet asset. This is the first part. First, you need to identify the adjustment is of which nature. In the earlier sum, advertisement paid for 9 months, so adjustment was in the nature of outstanding expense. Over here, we have paid the advertisement in advance, so the nature of adjustment is of prepaid expenditure. So, what are the effects for prepaid expenditure? Less from particular expense and balance sheet asset. So, this is the first part. Now the second part, how to calculate the amount. We have paid the advertisement for 3 years, which is equivalent to 30,000. So it's very simple. For 1 year, the advertisement expenditure is rupees 10,000. So we have to write the expenditure of 1 year over here only. So the balance amount 20,000 is in the nature of prepaid. So to advertisement. Again, this is a hidden adjustment, so we will do at the same time. To advertisement, less prepaid expenses. The amount is 30,000 less prepaid amount is 20,000, and my current year expenditure is 10,000 only. I am leaving some line over here, approximately 6 to 7 lines, and writing down prepaid advertisement amount is 20,000. Be careful when you write the amount. 10,000 is my current year expenditure and 20,000 is of my prepaid expenditure. So this was a hidden adjustment, so we have done at the same time. Now move on. Bad debts. See what you will do for bad debts. For bad debts, what we have to do? Over here in this particular sum, only two adjustments are there on bad debts. What are the two adjustments? One is old bad debts and another one is a new RDD. The things which are given in trial balance is my old, that is old bad debts and old RDD. Now you can go through when you will read the sum, itself you get to know that is only bad debts on the debit balance, nothing has been mentioned in credit side, and below also there is only one adjustment on data, that is new RDD. That is new RDD. So I am not writing the entire chart over here. I am writing only old bad debts and new RDD. Old bad debts plus new RDD. Old bad debts, the amount is 500. Sorry, we will write in the inner column. Discount allowed. Amount is 1800. Cash in hand, cash at bank and fixed deposit. All these three is my asset. 7,000, 20,000 and 15,000. Cash in hand, cash at bank and fixed deposit. We will verify the amount. 7,000, 20,000 and 15,000. Capital account, as there are no adjustments on it, so only net profit part, so there will be only one line. Capital account, Piyush, 80,000 and capital Arun, 80,000. Then sundry creditors, 2,500. Interest received on fixed deposit, there is an adjustment on it. Interest received on fixed deposit, so I may have made some FD on that. I am going to receive some interest. So by interest received on FD, the amount is 1,000. Adjustment on it, so I am writing in the inner column. Bank overdraft. Bank overdraft basically negative bank balance, so it is a liability for us. $10,000. And the last one is sales. I am writing directly in the outer column. 20,000. This is how you have completed the posting of both the sides, that is debit balance and credit balance. Now we start with the adjustments. Adjustments we have to write at two places at the same time. Once you return the first effect, immediately you will write the second effect. Stock on hand 31st March 19 was cost price 40,000 and market price 35,000. Now don't get the misconception that you have to write the cost price. Do remember, whichever amount is lower, now remember this much only, the amount whichever is lower, that will be my closing stock. Either it be cost price or market price. Over here, the market price is a lower amount, so that will be my closing stock. The amount whichever is lower is my closing stock. Closing stock. $35,000. Closing stock. $35,000. The next is interest on fixed deposit rupees 1,200 is still receivable. So 1,000 rupees I have already received and 1,200 is still receivable. So what it means? Income due but not received or outstanding income. So now what to do with outstanding income? Add to particular income. Second effect, balance sheet asset. That is 1,000 rupees you have received, 1,200 is yet to be received. So simply you will add it interest received on FD and second effect we will write on asset side. Add interest receivable 1200. Outer column will write 2200. Second defect, write at the same time. Second defect is what? Interest receivable. Amount is 1200. Provide RDD 2.5% on debtors. So it is a new RDD. Less new RDD at the rate 2.5%. Now how you will calculate this? Instead of 43,000 into 2.5%, what you will do? 43,000 ka 10% is 4,300. 2.5 is the 1/4 of 10%. So 4,300 ka 1 by 4 you have to do. 4,300 ka half is how much? 2150. 2150 ka half is how much? 1075. This is how you will calculate it in within a second. 43,000 ka 10% is 4,300. 2.5% is a 1/4 of 10%. So simply calculate 4,300 ka 1/4 instead of calculating 43,000 into 2.5. Forty-one 925. Next is sorry, we have to write second effect. Don't forget to write the second effect. 1075. So it is a old BD plus new RDD. So we have to add both this amount. 1575. Next is depreciate furniture by 5%. Less depreciation at the rate 5%. 2200 ka 5%. What will be the amount? 2200 ka 5% will be 1010. 1010. We'll reduce it. Amount will be 19190. Second effect, there is only one depreciation on furniture. So I am to depreciation on furniture. Directly writing in the outer column 1010. Next adjustment is goods of rupees 8,000 destroyed by fire and insurance company admitted a claim of rupees 6,000 only. First of all, do understand this adjustment. Goods of rupees 8,000 destroyed by fire and insurance company admitted a claim of rupees 6,000 only. So total goods lost by me is of rupees 8,000. Insurance company is going to pay me 6,000. So what is the net loss for me is of rupees 2,000. So when we were understanding this chapter at starting, trading credit, what we write? goods go out of my business. So total goods goes out of my business is of rupees 8,000 as the entire goods got destroyed. So 8,000 will write it down over here. Amount which I am going to receivable from insurance company. So it is an asset for me. That is insurance. That I will write it down over here 6,000. And net loss for me is rupees 2,000. So that we will write it down over here to loss by fire. So there will be a three effects of this particular adjustment. One is in total 8,000 goods destroyed, we'll write it down in trading credit. Amount which we are going to receive from insurance company 6,000, that will write it in asset, and to loss by fire we will write it down over here. Is that clear? So buy goods destroyed by fire. How much goods destroyed? Total amount is 8,000. The amount which are going to recoverable from insurance company is insurance claim is rupees 6,000. And the net loss for me, that we will write it down in P&L debit to loss by fire 2,000. If suppose the entire amount is uninsured, for example, if the adjustment would be uninsured goods destroyed by fire, or there is no insurance for this particular destroyed. So the entire amount is lost. So total goods goes out of my business is 8,000 and total amount loss is also 8,000. So when uninsured goods got destroyed, there will be only two effects. One is trading credit, entire amount got destroyed and the entire amount is lost and nothing could be recovered from insurance company. So there will be no effect on balance sheet asset. Just keep in mind this particular part. If you want, I can explain you with the journal entry also. See, loss by fire, nominal account, so it's a debit. Loss by fire account, debit. Insurance claim, and I'm going to receive, so it is an asset for me. 2, destroyed by fire. Real account, credit what goes out, destroyed by fire. So loss by fire is how much? Nominal account. This goes with the nominal account. 2,000. This is real account. I'm going to recover the amount, and this is again real account to destroyed by fire 8,000. So this is also you can remember it. Simply total goods जितना चल गया वो ट्रेडिंग क्रेडिट पैसा मिलने वाला है बैलेंस शीट एसेट और जो लॉस होगा वो P&L डेबिट. Remember this much word for now. And if nothing could be recovered from insurance company, only two effect. Okay, so this is how we have completed this. So, see, now before starting to close the sums, what you have to check whether all the amount has been written in the outer column or not. See, you have to look at over here. This 80,000 we have not written. There was no purchase written. So we simply put a dot dash and we'll write it outer column. Correct? Now how you will close the sum? Single line, double line. I was already explaining in the last sum. Single line, double line. No need to go on the last page to make a total. Do write in tens के नीचे tens, unit के नीचे unit, tens के नीचे tens, 100 के नीचे 100, 1000 के नीचे 1000. Correct? So it will easily help you to make a total on the same page. Write the total with the pencil on both the side. Then the bigger side we will write on the total column, and then we'll find it out the gross profit. Again, I am just showing it to trading side how you will do. Zero, 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 8 plus 5, 13. 3 plus 2, 5, 6. 1,63,000. 0, 0. 8 plus 5, 13. 13 plus 5, 18 plus 7, 25. Equal to 7 plus 2, 9 plus 3, 12 plus 2, 14. 3 plus 1, 4, 8 plus 4, 12. So 124, 500. So the 1,63,000 is both the same. We will write it down. And we'll do less here only. No need to go on the back side. 0, 0, 5, 8, 38, 500. So this is my gross profit. So this is how you can make a total on the same page instead of going on working part. And gross profit, carry down, balancing figure 38, 500. So this is how you make a total. Over here, profit sharing ratio has not been mentioned. So we will assume the profit sharing ratio is equal. Is that clear? Now I'm not making a total for this sum. Again, you know how to make a total on the same page. We carry forward is 38,500 over here by gross profit brought down 38,500. See, now it's properly 0 के नीचे 0 है, so you can easily make a total over here. Here also you can easily make a total over here. Total it, write it down with a pencil on both the side, and then reduce it the lesser part, and then net profit and divide equally. Again in this sum, you will get a odd amount. So what we will do, we'll give 1 rupee more to each of the partners. Make a right net profit, write it down over here, make a total and get this sum done. Is that clear? Okay. Now we'll do sum number 7. Sorry, 5. 5 we'll do later on because it is our current account concept. First we complete the basic part. So we'll do sum number 7 first, then we come down again to 5. We'll do sum number 7, page number 39 of your textbook. Sapre and Atre are partner sharing profit and losses equally. From the following trial balance and adjustments, prepare trading and profit and loss account for the year ended 31st March 2019 and balance sheet as on that date. Now with the pencil, what you will do? You will just note it down all the posting and adjustment docs. Correct? Then you will start with the sums. So we are directly skipping that step and we are starting with the sum. The first is sundry debtors. There are two dots on sundry debtors. So we'll leave 3 lines. Sundry debtors amount is 40,000. Purchase. Usually we write the stock first. So I am writing opening stock. Then we write purchase less purchase return. The amount for purchase is 65,000. Then return. See, only return has been mentioned and it is on the debit side. So it is always being a sales return. Don't make mistake of this. But this purchase and sales and return are always on the opposite side. Sales return always on debit balance and purchase return always on credit balance. So I am writing my sales less sales return. Don't leave the line and jump onto the sales. Keep on the same line and same page. Return 800. Opening stock 18,000. Land and building, one dot is there, so we write in inner column. Land and building 10,000. Carriage, only carriage as told you earlier, it is a trading debit. One dot on it, so we write in inner column. Carriage 1,200. Rent, rates and taxes, it is a P&L debit. Rent, rates and taxes, the amount is 1,000. Drawings, where we have to reduce it from capital. Both the partners has his drawing and it is given where in trial balance. Trial balance always has a one effect only. So don't need to write in trading credit. Capital. This is the name of the partner. Sapre and Atre. Less drawings. Capital. Atre. Less drawings. 3,000 and 2,000. We have to reduce it and write it in bracket. No need to jump again to capital account. Don't leave the line. Salaries, profit and loss debit. $3,200. Bad debts. See, there is a bad debts is there. So we need to check. Bad debts. 1 over is over here. On the credit side, yes, RDD is there. So we need to write the entire chart. So we write entire chart. Oh no, how we will remember the chart? Oh no, old BD plus new BD plus new RDD less old RDD. Old BD plus new BD, that is new bad debts. New RDD less old RDD. So Both the old you will get it from trial balance and this you will get it from adjustment. Old BD amount is 1000. I am writing in inner column. Machinery 25,000. Something has been written in bracket. We'll explain you at the time of adjustment. 25,000. Advertisement ED 4,000. Now provident fund investment. Okay? So where we will write asset side. Investment words comes, that means it will be will write on asset side. I am writing in shortcut T dot F provident fund investment. Amount is 18,500. Now we'll come down to the credit balance. The first amount is 85,000, that is sales. There is nothing more adjustment on sales. I am writing down on the outer side 85, 70, 84, 200. Sundry creditors. There is one more adjustment on sales. I am writing in below the amount in the inner column. Sundry creditors. Liability 23,000. I am leaving some line over here. Sundry creditors 23,000. Sundry income 21. P&L credit. Capital 35,000 and 35,000. We'll minus it and write it down below only, or there is a net profit adjustment. This will be 32,000, this will be 33,000. Only provident fund. So that is a credit balance. Three places we can write it down: here, here, and here. So now by reading this particular word, it is definitely goods was not going out of my business. Neither it is other income. So the left out option is only liabilities. So even if you get confused, so just think about the thumb rule. Provident fund liability. We'll explain you this what is the meaning of it in later part. Provident fund 10,000. Return 1,500. $63,500. Commission pre-received. When first now we have seen one outstanding wages. In the same manner, it is commission pre-received. And where it has been written, it is written on the credit balance. So I have received the income in advance. So it is a liability for me. In the same part, it would be written on the debit balance. So it would be asset for me. In that side, expense which I have paid in advance. Over here, I have received the income in advance. That means The service has not been given, but the income has been received. So on this particular day, it is a liability for me. The day on which I have complete my service, it will get converted into my income. So as of now, credit balance, commission fee received, will both the combination will make it to the liability side. So commission fee received, where we will write liability side. 800 rupees. RDD, this is the old RDD, 400. We have to reduce it from all the three above amount. So I am writing in bracket. So we have done with the posting part. Now we'll do adjustment. Closing stock is valued at 23,000. So by closing stock 23,000. Write the second effect at the same time. Closing stock 23,000. Depreciate land and building at 5% and machinery at 10%. Less depreciation at 10%, that is 1,000. Less depreciation at the rate 5%. 25,000 का 10% is 2,500. We'll make a half for it, half of it. Write out. See again, land and building is 5%. So this will be 5%. So if you write down the percentage, there is a very less chance to switch over the depreciation part. Land and building is 5%. So 10,000 ka 5% comes to 500. 9,500. And this is 2,500. So outer column is 22,500. Immediately write it down the second effect. To depreciation, land and building and machinery. Land and building is how much? 500. Machinery will be 2,500. Don't forget to write the second effect. The next one is create a provision for bad and doubtful debts at 5% on Sunday debtors and write off ₹1,000 for bad debts. Now you can see immediately the next adjustment is goods worth ₹3,000 were sold, but no entry was found in the books of accounts. So this is the other adjustment which we have to do first. So while reading the question, immediately we will make a note of this. And also adjustment number 3, the new RDD adjustment has been given first and new bad debts later. In that also you have to switch the order of adjustment. First we will do new BD and then we will do new RDD. So kindly make a note of that. So first we will do now adjustment number 4. Over here I will little less space. Just removing this particular. Unrecorded sales. So what to do with unrecorded sales? We'll add to sales and second effect is add to debtors. Forgot to record the sales. So what to do? Simply add to sales and effect is on my debtor. So I will add my debtor also. So amount is 3,000. We'll write now in the outer column 84,200 plus 3,000 comes to 87,200. Sunday debtors unrecorded sales. Amount is 3000. Correct. Now we'll do adjustment number. Now adjustment number 6 is there, but it is related to unrecorded purchase. Correct. So it is nothing to do with your debtors part. So we can do adjustment number 3 now. Again in adjustment number 3, first we'll do later part, that is new bad debts, and then we will do new RDD. So new bad debts, already we have make a space for chart. I am reducing it from debtors. New bad debts 1000, 40, 2000. We immediately write it down in the chart. 1000 rupees. Now RDD we have to calculate 5% on sundry debtors. The percentage would be calculated on this revised amount and not on original amount. Make a note of it. Less new RDD. As I have left little less space, so it gets congested. 5%, 42,000 का 5% comes to 2,100. 42,000 minus 2,100 comes to 39,900. So I am writing in outer column. Correct. Now second effect will be we go to the chart when we have already made space for it. Correct. Now all the amount get filled up. So we'll do plus these three figures and reduce it. 1,000, 1,000, 2,000, 4,100 minus 400, which comes to 3,700. So we'll write it in a column immediately. So we have done with adjustment 4. We have done first. Then we have done adjustment number 3. In adjustment number 3 also we have done the later part first and then in the initial part. Now we come down to adjustment number 5. Outstanding carriage. Simple. Add outstanding expenses. Amount is 500. Second effect would be outstanding carriage balance sheet liability, that is 500. The last adjustment, goods worth rupees 8,000 were purchased on 31st March 19 and included in the closing stock but not recorded in the books of accounts. Here we have done the purchase but not recorded in the books of accounts. So unrecorded purchase, add to purchase and add to creditors. We have forgot to put a dot on over there, so we need to little bit redo it. Over here I am just writing down over here 63,500 unrecorded purchase 8,000. So 63,500 plus 8,000. 63,500 plus 8,000, which comes to 71,500. And the second is we'll add to the sundry creditors. Writing down again. Sundry creditors 23,000 and unrecorded purchase 91,000. So for unrecorded sales, add to sales, add to debtors, unrecorded purchase, add to purchase, add to creditors. Now there is a one new adjustments or new concepts in this particular sum is about depreciation on machinery. I am drawing a working note over here. Something has been written in the bracket. Then we go to the trial balance. machinery addition of 1st October 18 rupees 10,000. Correct? Now we are preparing trial balance as on 31st March 2019. We are preparing trial balance when? As on 31st March 2019. This machinery added on 1st October 18. So there is a first conclusion is that this 25,000 is inclusion of that rupees 10,000. So we are not going to add anything on that 25,000. That 25,000 is inclusion of my new machinery purchase on 1st October 18. Because trial balance is a later date and 1st October is a before date. This is the first part. As you can recollect your 11th standard, we calculate the depreciation on the basis of number of months usage. So when I have purchased this 10,000 machinery on 1st October 18, so I need to calculate the depreciation only for 6 months. That is from 1st October to 31st March. October, November, December, January, February and March. So now how we will calculate this particular part? I am just showing the working note. Machinery 25,000. The total machinery is of rupees 25,000. We'll make a two part of it. We will not add 10,000 into this because this is the inclusion of rupees 10,000. Don't make such a mistake. My old machinery and new machinery. Now what is old machinery? 10,000 I have purchased on 1st October, so balance left out is 15,000, which is equal to 15,000. And what about the new machinery which I have purchased on 1st October? 10,000. Purchase on 1st October 18. Correct? What is the rate of depreciation given is 10%. So for this 15,000, as I have used it for entire year, I have to charge depreciation full amount. So 15,000 into 10 upon 100 into 12 upon 12, which comes to 1,500. This 12 upon 12, usually we don't write it down because it gets cancelled out. But this 12 upon 12 is percentage of entire year. So 12 upon 12. Now the new machinery which I have purchased is on 1st October 18. So I have used it, that machinery for the current year is only for 6 months. So 10,000 into 10 upon 100 into 6 upon 12. The 6 upon 12 is important because I have used it only for 6 months. So I will write it down 6 upon 12. So 10,000, the 10% is 1,000. 1,000 into 6 by 12 come down to 500. So the total depreciation on machinery is old machinery 1,500 and on new machinery purchased on 1st October 500. So total is comes to 2,000. When this will do, then the something date has been given in the bracket. Otherwise, right now what we have done is correct if that bracket was not there. So make a note of it. Whenever something has been written in bracket, so we will do the depreciation part at the end. So we have to correct this particular part. Again I am telling you, this 25,000 is inclusive of the new machinery because the 25,000 is balanced as on 31st March 2019 and we have purchased the machinery on 1st October 2018. So don't add 10,000 into this 25,000. Just make a two part of 25,000. One is the old machinery, one is a new machinery. So balance left out is my old machinery, that is 15,000, and the new already given in the question. And then you will calculate the depreciation for 15,000 full year, for 10,000 half year. So we correct the depreciation of machinery part, which comes to only rupees 2,000. It is from the working note. So 23,000, and the second element also will get changed. So it's a 2,500. So, and you have to draw this working note in your exam. Correct? So now we have done with all the adjustments. The last adjustment also been done, unrecorded purchase, add to purchase and add to creditors. So this is a part of your working note. Is that clear? So now what we have to check before starting closing the sum. Check down whether all the amount has been written in the outer column. Over here, yes, purchase return, purchase unrecorded purchase return, carriage, unrecorded sales, bad debt, that entire chart written outer column. In balance sheet also jot it down. This net profit we will do right later on for other adjustments. Yes, done. So now we can start totaling the sums and closing the sums. How you will close the sums? Just draw the single line and double line. Take a pencil, note it down, amount over here, note it down, amount over here, minus the bigger amount from smaller amount, transfer gross profit over here, make a total of it, make a total it over here only. See, now this has been written properly with 0 to 0, so you can total it over here only. I am showing it. See, 0 and tens also 0, 100, 2, 7 plus 2, 9, 9 plus 5, 14, 4, 1 plus 1, 2, 5, 8, 12, 14. So you can make a total very easily on the same page. If you will write it down, you need tens, hundred, thousands in proper, 0 के नीचे 0. Correct? So this is how you will close these sums. Now we'll do sum number 5. Okay? Which is a current account part. First, understand when the current account gets appearing your trial balance. There is a concept called fixed capital and fluctuating capital. What is fixed capital? Wherein my capital will remain fixed from inception of my business, that is starting of my business. So in that case, now here you can see we are doing adjustments on capital. So my capital balance keep on changing at every point of time and every year on year basis. So under fixed capital method, the owners want to keep the capital fixed. So what they will do, they will open one more account called current account, and all the adjustment which is related to capital account will do in current account. So ideally you are just split under current account, you are just splitting the capital account under two parts. So what we are doing in capital account, reducing drawing, adding net profit, interest on capital we used to add, all this. The same thing we will do in current account also. So your capital will remain fixed under fixed capital method. Under fluctuating, what we are doing now, it's your fluctuating capital method. So whenever current account would be there, so all the adjustments of capital will do where in our current account. Like now suppose in this particular sum, if current account would be there, so we'll reduce drawings from current account. Net profit we would add to the current account. If there is any interest on capital, salary to partner, all these things we were adding to capital, so we were adding to current account also. Is that clear? So for current account, nothing new has to be there. We'll do all the things which we are doing it for capital. Instead of in capital, we'll do it in current account. So now we are starting with sum number 5, wherein there is a current account. And we are not preparing capital account separately because there is a not much adjustments in these three sums which we have done. If there are much more adjustments, so we can separately prepare the partner's capital instead of putting this particular adjustment lengthy over here. So sum number 5, page number 34. Messrs. Sudarshan Traders is a partnership firm in which Ram and Krishna are partner sharing profit and losses in the ratio 3:2. See here they have mentioned the profit sharing ratio 3:2. From the following trial balance, prepare final account for the year 2018-19. Trial balance as on 31st March 2019. So what you will do? You just jot it down with the help of pencil. Posting part, debit balance where to write, trading PD and asset, credit balance, trading credit, P&L credit and liability. So I am starting with the sum. Opening stock by writing trading debit. Amount is 36,000. See now capital account is there. As we have discussed earlier, current account is there in this sum. So what we'll do? We'll write simply capital account, Ram and Krishna, as all the adjustment we are going to do in current account. So I am writing capital account, Ram and Krishna. No need to leave any lines because we are not going to do any adjustment under capital account. We write the total in outer column. 2,40,000. Current account is there, and now you can see is there are lot of adjustments in current account. So instead of doing plus minus over here, I am preparing separate working note for partners current account. It is not that के current account है इसीलिए separate ledger बना रहे. If the same adjustment would be there for capital, so we have prepared the separate ledger for partners capital also. ठीक है? So to do plus minus of core amount over here and make it so lengthy, I am separately preparing working note for partners current account. Working note. Partners current account. Ram, Krishna, Ram, Krishna. Correct? This is my debit side. This is my credit side. Is that clear? See, current account, the balance of Ram is being given on credit side. So we write it over here by balance brought down, and balance of Ram is being given on the debit side. So we write it down on the debit side. So by balance brought down, balance of Ram is 8,000. We'll put a dash over here to balance brought down Krishna, amount is 4,000. We put a dash over here. So current account, one is a debit balance, another one is on the credit balance. So I am just write it down. The credit balance is on the credit side and the debit balance on the debit side. Why I am preparing, again I am telling you, why I am preparing this ledger, not because the current account has been given, because there are a lot of adjustments on this particular current account. That is why I am preparing this ledger separately. Purchase, we'll write it down at purchase place. Purchase 1 lakh. There is a no return, so I am directly writing on outer column. My sales. See, this sum is above. Question has been given debit and credit together. So there are chances that both the things are coming together, and we will not leave the particulars wala line. So we need to jump it from trading P&L debit asset to trading credit P&L credit to liabilities because of the pattern of this particular question. Sundry debtors, we have only one adjustment, so I am leaving one line only. Sundry debtors, amount is 1,73,500. We write it in our column. Syndicatus 41,800. I am leaving line for current account over here, 2 lines. Syndicatus 41,800. Bills receivable asset 47,000. Bills payable 21,000 liability. Commission. See, in this type of patterns, you need to check only commission has been written. Amount has been written on which side? If the amount has been written on credit side, it is a commission received. If amount has been written on debit side, it is a commission paid. So whenever this single column trial balance, we need to be very careful. The amount has been written on which side? Only commission or discount has been written or rent. So whichever side the amount has been written, on the same side we will write it down. Commission 2,800. So amount written on debit side. So we'll write on trade P&L debit 2,800. Wages trading debit. Salaries 3,000. Furniture, check out there is no adjustment, so we'll write it in our outer column. Furniture amount is 63,000. RTD, chart is there, old RTD is there, old duty is also there, then one adjustment is also there. Correct? So new RTD was not there, so I am simply writing the three part. 2 old bad debts plus new bad debts less old RDD. Only these three questions. I am writing only three parts. Old RDD 1000. We have to reduce from above amount. So I am writing it and put it in bracket. Investment. Again, no percentage has been mentioned. So it's a simple. We write in asset side. 10,500. Loans in advance given. Here I am giving loans to someone, so it is an asset for me. I am not taking loan and giving it to someone, so it is an asset for me. Amount is 35,240. Insurance, there is an adjustment on insurance. So I am writing it in a column. Amount is 2,500. Bad debts, we have already created a chart. 500. 12% government bond. Purchase of 1st January 2019. So here you have purchased government bond. So basically it is a nature of investment. They have mentioned a date also and they have mentioned a percentage also. Correct? So in current year, the amount or interest which I will receivable from me is from 1st January 2019 to end date of my trial balance is 31st March. So 1st January, that is January month, February month and March month. So for current year, I am going to receive this interest only for 3 months. So this is a hidden adjustment in the nature of income due but not received or outstanding income. So first I will do the posting part. 12% government bond. Don't forget to write this particular. This is my investment part. This much amount I have invested. On that I am going to receive the interest. So first, this is the first part I am going to do. That is 12% government bond. I will write it down. And then the adjustment is on interest part. 12% government bond, 15,000. So 15,000 into 12 by 100 into 3 by 12. Again I am repeating, purchase on 1st January 2019. Balance sheet is getting, or trial balance is as of 31st March. I am going to prepare till 31st March. So from 1st January I will count till 31st March. So for current year I am going to receive the interest only for 3 months. So 15,000 into 12 upon 100 into 3 upon 12, which comes to 450. And the nature of adjustment is interest receivable. So what is the effect? One I will add to the asset and another is my profit and loss credit. Interest receivable. Hope you have understood the calculation. Again, this is hidden adjustment, so I am doing at the same time. By interest receivable 450. Is that clear? So we have added with all the posting part and one hidden adjustment also been done. Now come to the adjustment. Adjustment we will write at 2 places. Stock on hand 38,000. So by closing stock 38,000. Ram is allowed a salary of rupees 6,000 and Krishna is allowed commission at 3% on net sales. Here now we are giving salary and commission to the partner. Correct? So now we are preparing this particular balance sheet trading P&L is from the viewpoint of business. So here business is giving salary and commission to the partners. So from business point of view, it is an expenditure. First understood that. So instead of giving salary to outsider, here we are giving salary to partners only. From business point of view, it is an expenditure. That is the first part. So we have to write where profit and loss debit. And now this is a we are giving it to the partners only. So it will indirectly add to their capital or current account. So whatever you are going to add to capital or current account, we write always on credit side. And whatever we are deducting from capital or current account, we write on debit side. So what comes under debit? Only two things, drawing and interest on drawing, because these two we are reducing from capital or current account. And what all we are add? Commission given to partners, salary given to partners, net profit, all this we are add to capital and current account. So we will write it down on credit side. So what is the two effect of this particular adjustment? First, we will write to profit and loss debit as it is a business expenditure, and second effect we will write on partners account credit side. If you would have written current account over here, so we have added to this particular amount. As we are preparing separate working note, so we are writing on credit side. Salary of 6,000. So by Ram's salary. So basically we are writing it on a profit and loss. So here we will write profit and loss account, and in bracket we will write Ram's salary. And please make a note of that. We write in Ram's column 6,000. And the second effect will be profit and loss debit to partners salary or Ram's salary. You can write name also. To Ram's salary. Amount is 6,000. The second part of the adjustment is Krishna is allowed commission at 3% on net sales. So the sales is 2,08,000. Please note that they have written net sales. If return sales return was over here, so after reducing the sales return, whatever amount would come on that, we will calculate the 3%. Here there is a no sales return, so we will simply calculate on 2,08,000. So first effect is partners current account credit side, or you can write it out here also by profit and loss account in bracket Krishna's commission. So 2,08,000 into 3, which will come down to 6,240. Second effect will be profit and loss debit. Write the second effect at the same time. Six two four zero. interest on partners capital is to be provided at 5%. See, now interest on capital is an expense for the business. Why it is an expense for the business? Because capital is basically loan taken by the business from the owner. If I have taken the same amount from the outsider, I need to pay interest to the outsider. I am just separating the amount between the two people. As amount has been bring in by the owner, so I am writing down capital. If the same amount I have taken from the bank, I would write it down bank loan. So if the same amount is owner invested somewhere else, so he can definitely get some part of interest on it. So he is basically charging interest to the business. So it is from business point of view, it is an expenditure. So interest on capital is expenditure. Do remember that. On the other way around, interest on drawing is an income for the business because owner is withdrawing money from the business. So business is reducing his own fund. So if the same amount it could have invested somewhere else, so business will definitely get some interest. But instead of that, the owner has withdrawn. So the business will charge interest to the owner. So conclusion is interest on capital is an expenditure from business point of view, and interest on drawing is an income from the business point of view. As we are writing this entire thing is for business and not for their personal account. So interest on capital is an expenditure. Do remember that. So it is an expenditure for the business. Obviously, the cost effect will be profit and loss debit. And as I am giving this amount to the partners, so it will get credit to partners' current account. We are adding interest on capital over here. So whatever amount we are going to add, that we write on the credit side. Now, how will calculate the amount? Simple. 1,60,000. 5% and 80,000 5%. So by profit and loss account, bracket will write interest on capital 1,60,000. Ram's capital is 1,60,000, so he will get 8,000 interest, and Krishna 80,000, so we will get 4,000. The second effect will be profit and loss debit to interest on capital. The total is 8,000 plus 4,000 comes to 12,000. Provide depreciation on plant and machinery at 5%. So we have okay, furniture is 25,000 and we have skipped the plant and machinery. So this is 25,000 I am writing over here, and plant and machinery $63,000 less depreciation at the rate 5%. How much will be the amount? 3,150. After reducing this particular part, outer column is 59,850. Second effect, there is only single depreciation, so we can directly write in outer column depreciation on plant. Amount is 3,150. Next adjustment is 3000 from our customer is not recoverable. Customer means our debtors. So 3000 amount is not going to recoverable from our customer. So it is a new bad debts given in adjustment. So new bad debt, one effect would be we reduce from sundry debtors. Another effect we will write it down in profit and loss debit. So less new BD 3000 we write in outer column. The second effect will be in the chart. Correct? The chart is completed now. So we write in outer column 3000 plus 500 minus 1000. So the outer column is 2500. Last is a prepaid insurance. So it is a prepaid expense. What is less from particular expense? Second effect balance sheet asset. So less prepaid expenditure amount is 500. Second effect is balance sheet asset. Amount is 500. Prepaid insurance. So this is how we have done all the adjustments. Now what we'll do first, we'll close our trading account, correct? Then we will close profit and loss. Now net profit we will transfer to partners current account and then we will close the partners current account. 2,08,000 plus 38,000 comes to 2,46,000. Our gross profit would be 1,08,240. Transferring gross profit in profit and loss. $1,08,240. Then we will close this particular part. My P&L credit side total will be 1,08,690. 1,08,690. And my net profit would be 71,000. Now the ratio has been given is 3:2. Correct? The ratio has been given is 3:2. Now how we'll divide? I am showing it. First of all, we will write it down to net profit 71,000. Where we will transfer this net profit to partners current account. Transfer to current account. Here I am showing it, but you do not. Distribution of profit. Ratio given is how much? 3:2. So Ram's profit 71,000. The total ratio is 5. That 5 part I am going to divide between 3 and 2. So 71,000 into 3 upon 5. And Krishna's profit is 71,000 into 2 upon 5. So first what we'll do, 71,000 divided by 5. That part we'll do first. which comes to 14,200. Then 14,200 into 3, 42,600. And the second 14,200 into 2, which comes to 28,400. So this is how you will distribute the profit whenever the ratio is other than the equal. That is 3:2. So 3 upon 5 and 2 upon 5. And this working note you supposed to show it in your part. If the equal ratio does not require, but ratio is other than equal, you have to show this working note. Distribution of profit. Ratio given is 3:2. Total profit was by 71,000. So 71,000 divided by 5 into 3. First you will divide it, and then divisible amount will multiply it into 3 and into 2. So this is how you will get a profit part. Now where we will transfer this profit to partners current account. Where we will transfer this profit to partners current account by profit and loss account. Amount is 42,600 for Ram, and for Krishna it is 28,400. Is that clear? So we are not transferring to capital because we have separately prepared the current account. Now we'll close this partners current account, and the balance of partners current account will transfer to liability. Whenever we close any ledger, we have to follow the same pattern. With the help of pencil, we will write it down below that part. See over here, if we will write properly 0 के नीचे 0, so you can easily make a total 0, 4, 4 plus 2, 6, 6 plus 4, 10 plus 8, 18, 8, 38, 640. So I am writing 38, 640. Over here there is only 4,000. So 38, 640 I will write on both the side. So the lesser side is this. So to balance carried down amount is, how did you arrive at this amount? Balancing figure 38,640 minus 4,000 comes to 34,640. The same way we will do it for Ram also. 8 plus 6, 14, 14 plus 8, 22. Then we will do it 0 to 0. 0, then 600, 8 plus 6, 8 plus 2, 10, 18, 18 plus 6, 24, 4, 64, 600. So now this side is the 0. So 64, 600. So all the amount will be written down over here. Now where we will transfer this particular balance? To liability side, that is current account. Ram 64, 600 and Krishna 34,640. We'll make the total and write it in outer column. 640, 4 plus 4, 8, 6 plus 3, 9. So the total is 98,640. And the balance sheet total is I'm just removing this working note. Sundry creditors 41,800, bills payable 21,000. We have transferred this both the amount to the liability side. So whenever we prepare the partner's current account separately, so what we'll do, we have to transfer net profit to partner's current account, then we will close this particular balance, and then we will transfer this amount to the liability side, and this is how this amount will get totaled. So current account has been given in the question, so we'll do all the adjustments related to capital account in current account. And why we have prepared this ledger separately? Because there are 1, 2, 3, 4 adjustments over there. So instead of adding and lessing 4 adjustments over here, we have separately write it down in working note. So whatever amount we are adding to the capital or current account, we write on credit side. The amount which we are deducting from capital or current account, we write on the debit side. What are that part? Drawing and interest on drawing. In this question, drawing and interest on drawing is not there, so that is nothing will be there on the debit side. Again, I am repeating how we will do the final account part. First, do remember the thumb rule. Then read the question on first paragraph. What they will give you? Profit sharing ratio, and nothing has been mentioned about profit sharing ratio. It is equal. Then with the help of pencil, we will write about the posting part, debit balance, trading debit, P&L debit or asset, credit balance, trading credit, P&L credit or liability. With the help of pencil, just jot it down this all part, then come down to the adjustments. Wherever you have to put a dot on all the part regarding adjustment, just put a dot on that, and then you start with the sums. In board question paper, the size or the length of the answer sheet is little bit less. So instead of preparing trading P&L on the one page, you can prepare trading account on one part, P&L account on one part, and balance sheet asset on the one part. Then start with the sums. Adjustments, always write both the adjustments at the same time. Okay, so this is how we have tried to cover almost all the concepts of partnership final account. There are some basic adjustments. Outstanding expense, what you will do, add to particular expense, balance sheet liability. Prepaid expense, less from particular expense, balance sheet asset. So this is an expense part. Now what about the income part? You will, for prepaid income, less from particular expense, balance sheet liability. Income due but not received, or outstanding income, add to particular income, balance sheet asset. So expense and income, outstanding add होगा, second effect expense होगा तो liability, asset होगा तो income होगा तो liability side, asset side में. And on the other way round, if there would be income part, तो reverse way करना है. So outstanding, what we will do? Both the outstanding will get add. Expense we will write on liability side. Income we will write on asset side. For prepaid, both for expense and income you will minus it. If it is a prepaid expense, we'll write on liability side. If it is a prepaid expense, sorry, we'll write on the asset side, and prepaid income we'll write on the liability side. Then the common adjustment regarding depreciation, less from asset, profit and loss, debit side. Then bad debts wala part, what you will do? You have to remember that chart ONO, old bad debts plus new bad debts plus new RDD less old RDD. Both the old bad debts and old RDD, you will get it from trial balance, and it has only single effect. So don't get confused. For new bad debts and new RDD, you will get it from adjustment. One effect is reduced from debtors. Second effect you will write in the chart. So this is a part of the bad debts. What is the order of adjustment for debtors? Other adjustments, then new bad debts, then new RDD, and then the last is reserve or discount on debtors. So this is the common adjustment which usually comes for the exam, which have already covered to all the 4 sums. Now any other doubts for final account, so you can post on my WhatsApp number. My contact number is 7506 34458. So you can post your doubts regarding final account. Kindly wind up the final account today itself. We have already done the 4 sums. Still 16 sums are left in your textbook. Just solve 3 to 5 sums in your notebook, and for other sums, go through the adjustment part and the posting part. There are some uncommon posting part like export duty. We will write in profit and loss debit. Import duty, we write in trading debit. Productive wages, we write in trading debit. Unproductive wages, we will write in profit and loss debit. So these are some uncommon posting. Just go through that in your different sums and wind up the partnership final account. Tomorrow we will meet it at the same time for admission of partner. Initially we'll just go through the concepts and again we'll solve almost 3 to 5 sums. See you guys.